Greetings. The content that will be discussed in this video are object costing and basic managerial accounting concepts. This presentation will be mainly focused on definitions, and the next one will be focused on applying the concepts you learn in this video. Chapter 2, or Basic Managerial Accounting Concepts, can be found on pages 26 to 65. First, we are going to delve into terminology regarding basic managerial accounting concepts. First, the concept that is discussed in basic managerial accounting concepts is called the cost. Costs are cash used for goods or services in order to bring a benefit to an organization, and they are usually used to make revenues. While referring to expenses, expenses are considered to be expired and used, like the definition in financial accounting, except in managerial accounting, expenses refer to expired and used costs. Costs can be applied to anything, whether it is long-term assets such as plant, property, and equipment. For example, your landlord's property where you rent an apartment, or the local ballpark, while also costs can be applied to inventory, which is a current asset like the milk at the store, and customers, etc. These items that are assigned a cost or costs are measured for are called cost objects. There are two types of costs that can be assigned to cost objects. First is direct costs. Direct costs are related directly to an object, which can be seen or observed explicitly. For example, the cost of a plastic bottle when packaging juice is a direct cost. Next are indirect costs. These are costs that are not directly related. Also, they are inferred and difficult to assign to an object. Most businesses refer to them as overhead costs. The next concept I am going to discuss is overhead. Overhead is considered to be comprised of indirect materials, for example, when making a desk, would be nails and glue, and indirect labor. For example, the person hammering the nails and the glue to create the desk. Overhead concepts are not really worth tracing, and they're not a uniform amount throughout. For example, there's not the same amount of hammering on every part of the desk, and there's not the same amount of nails and glue. One of the most important direct costs is considered to be direct labor. An example of direct labor is an accountant who is paid to create a financial statement. Also, there are direct materials. Direct materials are materials that are directly traceable into an object. For example, when creating a plastic desk for little kids from Little Tykes, the plastic parts are directly traceable, or a form of direct materials, plastic. Another important term is raw materials. And also work in process. Raw materials are important as they're used to be able to create a product. Next is work in process, which is the cost of partially completed goods. For example, when creating a beer, it goes through several different processes in order to come to the finished product or finished good. Additionally, there are product costs. Product costs are direct materials, direct labor, and overhead. A useful equation for product costs is total product cost is equal to direct materials plus direct labor plus manufacturing overhead. In order to find the per unit product cost, or how much it costs to create a unit, you would wind up doing the total product cost divided by the number of units produced. Once again, that is the per unit product cost. Let's just say that direct materials are $1 to create the shoe, a pair of shoes, and direct labor is $5, and the manufacturing overhead is $3. And the number of units produced are 3. So, if you add them up together, $9 divided by 3. So the per unit product cost of the pair of shoes cost is equal to $3. There are also prime costs, which are direct materials plus direct labor, and conversion cost, which is direct labor plus manufacturing overhead. Also, there are period costs. These are selling and administrative costs. Selling costs are considered the cost to market and distribute a product. For example, the price of a marketing team. Administrative costs are used for research and development and organizational costs. For example, a type of administrative cost is the cost for executive salaries. For example, the salary of the CEO of an organization. Next is the cost of goods manufactured. Cost of the goods completed and transferred into finished good inventory. The last is cost of goods sold. gross margin, and operating income. Cost of goods sold is how much it costs to make a product, which is, you remember from financial accounting, is reflected on the income statement. And they are also sold during the period transferred from the finished good inventory on the balance sheet and then into the income statement. Gross margin, as you remember from, I believe, financial accounting, it's considered to be sales minus cost of goods sold. Operating income is equal to gross margin minus selling and administrative fees. This concludes our Chapter 2 brief definitions video, and next is the conclusion of Chapter 2, including exercises and applying the definitions into accounting concepts. As you know, resources can be found at the ACE, Bedford Math Center, Lowell Math Center, and eTutoring. Thank you for watching and stay tuned.